All right, everyone. Thanks for joining this webinar. Of course, we're back again. We jumped on a webinar call last week to talk OPEC policy, and we're back again this week talking about Trump's visit to the Middle East. Considering outcomes, considering what that might mean for the oil market, considering what that might mean for geopolitical policy today. My name is Reed Ianson. I am head of macro here at Kepler. I'll be moderating this discussion. I'm joined by Amena and Hamayoun, who are both critical oil experts on our team. They're going to be diving into all of these key topics as Trump makes his rounds through the Middle East. Keep in mind, we'll talk for 20 or 30 minutes and then try and take 10 to 15 minutes of questions. As you think of questions, go ahead and send them in, and we'll make an effort to touch upon them at the end. With that being said, I will hand off to my colleagues to dive into these topics.
Thank you. Thank you so much, Reed, and good afternoon, everyone, or good evening, good morning, wherever you are. Thank you so much for joining us. I just came back from Riyadh, where Trump was a couple of days ago, and needless to say, I mean, this is a historic visit on all fronts. And I mean, if the objective for him was to make America great again in the Gulf, it's really happening. He received a very, very warm reception in Saudi Arabia from the moment he arrived. It really showed, I mean, it was no secret that the Biden administration had a much colder relationship with leaders from the Gulf region. Trump really turns a page to all of this on the political front, on the investment front, but also on the energy front. And I'll go through some of the highlights here. So during Trump's visit, there was a U.S. Saudi investment forum. Trump came on stage and he gave a 50-minute speech. He covered a lot of ground. It was a bit sporadic, but the main highlights were, at least to me, were that he wanted to say that he is not here to intervene in the way that Gulf leaders rule their state or interfere in their national policy. And this is a very sensitive topic for a lot of Gulf leaders, and they feel like sometimes previous U.S. administrations were interfering too much. We're dealing with a completely different Gulf region at the moment, where you have a diversified economy. In Saudi Arabia, you have a lot of reform happening on the social front, economic front, the political front. So hearing that from Trump really was very much appreciated. I mean, in his words, he said, "No more lectures on how to live." Second, I mean, he highlighted that he's not a warmonger. He wants to bring peace to several regions. Of course, he gave himself credit for the peace between India and Pakistan, and he said he wishes to see the same out of Ukraine and Russia. He criticized Iran, but in the same breath also extended an olive branch, saying that he wishes to reach a deal with Iran. And just speaking with a lot of Saudi officials there, I feel that there's a lot of support for reaching that agreement. They want to see stability in the region that would help them further enhance these Vision 2030 plans for the country. They don't want to see attacks like we saw in 2019. So that's, again, a critical point for Saudi Arabia. In terms of deals, I mean, you've all seen the headline figures for Saudi. There was a promise by the Crown Prince that Saudi Arabia would invest up to $1 trillion. From Qatar, it was 1.2 trillion. These are headline figures, but in reality, for Saudi Arabia, what was signed during that conference were deals worth 300 billion, but many of them were MOUs. They're non-binding agreements, but it still shows you the extent of the effort that Saudi Arabia wants to make to appease to Trump and, you know, make that relationship stronger. 50% of those deals were kind of in the energy space. There are a lot of government to government MOUs that have 26 tracks that are going to be in place. And that's something that the Energy Ministry in Saudi Arabia and Chris Wright will be handling, but also a lot of B2B as well, business to business. Aramco is looking, for example, to expand the Motiva refinery. They're looking at LNG projects in the US. So expect some announcements to be made on that front looking forward. One of the surprises that was delivered during the conference was that Trump is going to be lifting sanctions off of Syria. And this, he gave credit to the Crown Prince of Saudi Arabia for doing that. It was a request by the Crown Prince, and then the day later, the Syrian president arrived, and we saw that historic photo of them both shaking hands. Now, in terms of the upstream front with Syria, their production now is slightly under 100,000 barrels per day. They could go up to 350, but it's going to take a lot of investment to get there. And these sanctions still, in order for them to be removed, it's not instantaneous. It's going to take time. And in order to rebuild that confidence back into the market, it's just something that we're not going to see. So on the supply side, there is really no concern. Now, on the oil front, everyone was waiting for Trump to drop that big bomb of saying, okay, I want oil prices to be $50. He didn't go near that topic. And from speaking to Saudi officials, even privately, Trump did not make any requests to lower prices or for Saudi Arabia to produce more oil. Nothing happened on that. And it kind of links to what he said, that he's not going to be intervening in policy that pertains to the kingdom's national interests. So on the oil policy front, I still expect Saudi Arabia to just follow what they see as national interests. And my colleague Hamayoun will kind of run you through some of the scenarios we have in terms of what that means for OPEC policy. But just to highlight again that Trump did not mention a certain oil price, did not ask Saudi Arabia to be producing more. And with that, I'll hand over to Hamayoun.
Thanks, Amina, for all this. I'm sure you had a very busy few days in Riyadh. So let's go over some of the latest numbers and outcomes when it comes to especially the oil market. And so you are pretty much aware that OPEC Plus started bringing barrels back from April onwards. We already led a few webinars looking at this specific topic. The last one, Amina, you led it, I think it was about 2 weeks ago. It's still available on our Insight portal. So I would invite you to go out there and watch that one as well. But so looking at OPEC Plus production, this is pretty much the right chart, shows you what it looks like right now in terms of calendar. So when you include the compensation plans from all of these countries that are part of that declaration of cooperation, so the 8 countries which have been cutting the 2.2 million barrels per day of production altogether, have been submitting some of them compensation plans. And when you take those into account, you see that the production hikes that we see in April, May, and June are slightly less than what's on paper. So the April hike was a normal one of about 130 KBD. May and June is an accelerated hike for both months of, on paper, 411 KBD. But you see that according to the calendar and to where production was already before, that production hike is going to be slightly less. So about 250 for May, about 360 for June. Now, the rest of the calendar for now looks like this, assuming a normal hike every month. It doesn't necessarily mean that this is what will happen. We actually believe, as you can see in the title, and Amina, feel free to chip in if you want to say more on this, but we actually believe that it makes sense for the group to do another accelerated hike in July, for the month of July. So in short, bringing those 3 months that you have, July, August, September, forward into July. There's a few reasons for this, and especially linked to the oil market dynamics in the short term, with the summer season just around the corner, a lot of refinery capacity coming back globally, especially in Asia, where a lot of these barrels will be destined for. And so all that strength in physical demand in the short term means that it makes sense to do another accelerated hike. There's also one other major reason. It's the fact that you have lagged in terms of compliance when it comes to these countries. But you can see from the left chart that it's really mainly Kazakhstan that is the major outlier in terms of compliance. And so when it comes to this, lower prices, I would say stricter policy when it comes to those production hikes also put some pressure on producers like Kazakhstan. However, when it comes to Kazakhstan, we don't expect them to significantly decrease their production because 80% of their production capacity is operated by majors. However, in the next few weeks and months, I suspect that we could see more and more, maintenance, unplanned maintenance, potentially technical issues happening at the CPC terminal. Things like the events that we saw at the end of March or early April, which crippled their exports for a few days. Maybe that's an easy way to reduce production and exports from Kazakhstan. So
Hamayoun,
again,
sorry, if you just
yeah,
allow
go
me
ahead.
to say one other comment. Why Gulf producers see the summer as a good window to speed up this unwinding? It's because of the summer season as well. Domestic demand in the Gulf goes up, and we have an estimate for that. I believe, Hamayoun, you estimated around 1 million barrels. Is that correct
Yeah.
for the 3 months period? So that helps absorb or buffer some of that production. In addition to that, you have Hajj season in Saudi Arabia. Hajj means pilgrimage. And usually, again, product demand during that period goes up. So this is a great way for them to speed up these increments. And the objective here, really, they want to get rid of that 2.2 million barrel per day voluntary cut. And I'm not seeing any appetite for them either to slow down or to pause, but it depends on market conditions. And just one last thing, ahead of the Trump visit, when he announced that, the kind of walking back on the China tariffs that caused the oil prices to improve, we're looking at 65 Brent now. That was, kind of appreciated by many of it was seen as a positive sign because they expected that Trump will be starting to kind of walk back from many of these tariff announcements. Over to you, Hamayoun.
Yeah, absolutely. No, thanks a lot, Amina. These are very, some of the other major reasons why we think another accelerated hike makes sense for July. I guess the issue for OPEC Plus is really beyond July because back then, by then, you would not have so much of a strong demand outlook, and then that decision becomes really a lot trickier. A lot of this, even though it's not directly linked, will also be down to what happens in the Iran negotiations, Iran and US, and whether we'd be losing barrels from Iran. But let's take a look at that later on in the slides. Just another, kind of another illustration to show that the shift, especially from Saudi Arabia, is really there, is really strong. If you look at the fiscal budget analysis for the kingdom this year, that's what you can see on the right chart. You can see that based on the level of oil being exported, the budget is still much more dependent to prices than to volumes exported. So in short, it's better to export less at a higher price than to export more at a lower price. We actually believe that at the current level of exports so far this year, the average export level from Saudi Arabia was slightly above 6.1 million barrels per day. At this level of exports, you need prices of $92 per barrel to fully break even the budget. Now, the actual budget is not built so that it fully breaks even. The Saudis themselves are planning for a deficit, if I'm not mistaken, of around 1.1%. But despite this, you can see that the shift is really strong because we're not in a world now where it's fair to assume and to expect high prices, especially not later this year or even into the first half of 2026. So there seems to be a realization from OPEC Plus, and especially from Saudi Arabia, that it's nearly impossible here. It's not really worth it to continue cutting production in order to support prices. And also, on the other side, you have lower prices, as Amena mentioned earlier, with Trump's visit. It kind of also holds a lot of other benefits to these economies with all the major contracts, even though, as Amena said, they're mainly at the state of an MOU right now, but a lot of major contracts, especially in technology, being signed between American firms and Saudi Arabia. Now, that said, you look at the exports from the kingdom on the left, you see that we are seeing a rise in the exports so far. I mean, we're only halfway through May, but there is so far an increase in the exports. So it shows that that production increase is really there. And at the same time, this comes, as Amena said, at the same time as a rise in domestic demand. You see demand in Saudi Arabia increasing through the summer very strongly. So this shows you refinery runs and crude burn. So it's more or less about 400 kbd rise simply in Saudi Arabia in terms of demand. And so a lot of that production hike will actually be mainly directed to the domestic market rather than being exported. So in the short term, despite OPEC Plus having increased its production and do 2 accelerated hikes, and as we expect another one in July, the impact on prices, at least in the short term, may not be that bearish. In fact, we do still see prices have some potential to rise. Now, one other reason we think why OPEC Plus is doing what it's doing right now, it's to reduce competition from Atlantic Basin and from west of Suez producers. We did another webinar earlier in the year looking at where supply growth is really the strongest this year. And it's really from the Atlantic Basin. You have the US and Brazil are leading the pack, but you also have strong production growth from Canada. So the US is about 200 kbd this year on year. Brazil is about 300. Guyana is about 60, 70. Canada is about 200. So a lot of new production is coming online, especially in the Atlantic Basin. And as you can see on the left chart, we have seen record level or very strong levels of flows, oil, coming from the west of Suez, going towards Eastern Asia and South Central Asia. So really the traditional customers of Middle Eastern countries and Russia since 2022. So one of the goals of OPEC Plus here is really to widen that Brent Dubai spread that you have. So you can see the Brent Dubai spread here on the right. 2 months ago, it was nearly at parity, and with the OPEC Plus decision, it started to widen to around $1 per barrel. Looking towards the summer, it's one goal for OPEC Plus, we believe, is to keep that as wide as possible so that west of Suez crude becomes less competitive and more expensive for Asian refiners. And we're starting to see the fruits of this policy. You can see in April, volumes coming down. In May, again, we're only halfway through May, so that volume that we're showing right now, I think doesn't make much sense. Probably will end up being higher, but still you see that the trend is there, and this is what OPEC Plus really wants to see. So Amena and I mentioned that this is coming ahead of summer season, at a time when margins are actually holding up quite well. You look at complex margins in Asia, they're not that high, they're not great, but they're still relatively healthy. They've been on the rise over the past few weeks. Even though we think that in the next few weeks and months, the upside remains quite limited. But you can see on the right that the refining capacity that's offline in Asia is peaking right now in May. But if you look beyond May, you have about 2 million barrels per day, even more, 2.5 million barrels per day of refining capacity coming back online. So the barrels that are traded right now, the June window will be mainly consumed, mainly processed in around July. And likewise, next month and into July, I think it's fair to assume that physical demand will remain strong, especially in Asia. So it's really key for OPEC Plus to have really to reduce competition and to have as much as much production as possible that's available here for these export markets. Once again, domestic demand also is rising, as Amina mentioned earlier. It's rising to a level of about 1 million barrels per day internally within OPEC Plus. So that 1 million barrels per day additional, refinery runs mainly, but also crude burn, especially in the Gulf countries like Saudi Arabia. This is mainly in the Middle East. You have 750,000 barrels per day, more demand in the Middle East, and you have another 250 KBD also, higher demand in Russia between now and the month of July. So a lot of the rise actually will be consumed domestically, not contribute to a lot more exports. And so it's fair to assume that prices will also react to that because the volumes available on the export markets will not be that increasing by that much. However, if you look at the level of production increase from that group of 8 countries in OPEC Plus, and you compare it with the cumulative demand increase from the group, you see that it's pretty much exactly matches that demand line. So you have production here, the production rise in blue, and the demand increase in orange. Again, this is assuming that there's relatively normal hikes after the month of July. But you can see that after July, after let's say the end of Q3, September, October, then the situation changes. Domestic demand in OPEC Plus decreases because of seasonality. And you have a big supply gap of about 580 KBD on average between, I would say, the end of Q3 and the end of Q2 2026. And so this is where the decision from OPEC Plus beyond July is going to be extremely important because this is obviously barrels that will remain available into export markets, will not be able to be absorbed domestically, and this contributes to lengthening the balances that we have. And obviously, this will be having an impact on prices in the second half of this year. Now, if you keep that number in mind, 580,000 barrels per day, it's very close to our expectations of how much barrels we could be losing from Iran, but also from Venezuela. So here I have a slide focusing on Iran. You can see that Iran's exports have been quite stable, quite robust actually over the past 2-3 months, despite the rise in sanctions from new sanctions from the US. Exports have remained around 1.5, 1.6 million barrels per day, as you can see on the left chart. However, on the other side, looking at imports, arrivals, how much of that oil has been able to be discharged in Chinese ports, it's much lower. The average is more around 1.2, 1.3 million barrels per day over the past 2-3 months. So that has contributed to a big rise in floating storage, which you can see in the middle chart, mainly in Southeast Asia, around Singapore, Malaysia, and in the Yellow Sea. So from about 10 million barrels to about 30 million barrels now. So I think it's fair to assume that as these barrels start, getting cleared, there will be less demand for other new barrels from Iran. The latest sanctions too from the US, the really strongest sanctions have been only in place since late March, and they have been targeting some of the direct buyers of oil from Iran, the Chinese teapots. 4 of them have already been sanctioned already for a total capacity of about 250 KBD. And so we think that this will at the end have an impact on Iran's production and exports. And so our base case is still that by the summer month, by July, August, we would be in a situation where exports from Iran drop by about 500,000 barrels per day. So if you remember the previous number that we had from OPEC Plus, that supply gap, that demand gap rather, this is more or less how much we could be losing from Iran. However, if there is a deal between Iran and the US, and Amina mentioned it at the beginning of this webinar, the fact that there's a lot of effort being put into that, including from regional actors, so that the deal gets signed, then if this is signed, it's fair to assume that Iran's exports would not decrease because some of the sanctions would be lifted, even though there's not much room for potentially more barrels, incremental production, because Iran's production capacity is already pretty much to the max right now. They've been losing production capacity over the past 5-6 years because of underinvestment. Nevertheless, the fact that Iran's exports would remain stable would obviously also lengthen balances and put downward pressure on prices. One other reason why OPEC Plus may be doing is what it's been doing over the past 2-3 months. It's to not just reduce competition in the summer from the west of Suez producers, but also to reduce that competition more in the longer term. And it's something that, they've been trying to do for a few times, especially back in 2020. It wasn't really successful. But this time as well, we think US producers will probably remain very resilient. So we're not expecting a big production decrease from the US. We have nonetheless decreased our forecast slightly. You can see our previous forecast here in April was slightly higher for this year and next year. The average break-even price in the US shale sector is located between $60 and $65 per barrel. It's roughly around $62, $63 per barrel for new wells, 63 WTI. So we're currently under that level. And it doesn't mean necessarily that in the short term production will crash, because a lot of the new drilling programs that will take place between now and, let's say, the end of September or even October are already being kind of paid for to an extent. So it's actually more costly for these producers to stop those programs rather than to go ahead. So these programs will still go ahead. We still see production come out from the US, offsetting some of the losses, some of the natural decline that there is in the country. Now, that said, if prices stay where they are so far, between now and the end of the year, or until the end of next year, or even get lower than where they are, then the impact would start be more important. So far the impact that we see from lower prices on US production is around 120 KBD less by the end of this year compared to what we used to have before. And on average next year we have decreased our view by 170,000 barrels per day. But you can see that again, if prices stay lower than where they are, let's say in a scenario where we're at $55 per barrel, then the average for next year would drop much more significantly, and we'd be in a situation where we could actually be losing about 600, 700 KBD from the US, despite producers being very resilient, despite majors having a larger footprint in the US shale sector, so that makes them that makes the sector less I would say sensitive to short-term variation in prices. There's basically so much that efficiency can do, and you can see that in the upstream activity. The number of DUCs, drilled but uncompleted wells, have been dropping. The initial productivity rates have been dropping from or at least not being able to increase much anymore. So those lack of efficiency gains, we think in the future will allow for the production to start dropping a bit more significantly. But again, we're not expecting a big crash from the US. And so lastly, this puts me to the conclusion of our presentation before we can move to the Q&A session. And it's simply to look at our price forecast based on our crude and condensate balances. You can see that on the left that our balances are much longer this year compared to last year, compared to 2023. So it's really down to weak fundamentals, both on the demand side, weak demand growth. We see only about 120 KBD crude intake growth from China, despite the new expansions from the Sinopec Zhenhai refinery and Sinop Dashie refinery, for instance. Other places as well, there's been a lot of refinery closures in the US, the Houston refinery, the Grangemouth refinery in Scotland. Another couple of setups also planned to be closing down in Europe. So the picture is not so great actually when it comes to demand. And when on top of that, you add more production from OPEC Plus at the time when west of Suez producers remain quite resilient, then it makes the outlook very, I would say, quite bleak. So you look at the price forecast that we have the second half of this year and the first quarter of next year, we see prices dropping. So this is dated Brent. It's about, I'd say if you compare that to Brent should be about $1 per barrel lower on average. So it means that we expect Brent to go down to around $60 per barrel on average, 61, 62 over the next, for the second half of this year and the first half of next year. But I think that, based on the latest outcomes, the latest happenings, and despite the fact that the US and China trade tensions have eased to an extent, I think the next price forecast that we will be having probably will come out in about 2 weeks' time at the end of each month. Probably we should be exploring the venue that Brent would be averaging under $60 per barrel. I think this is a very high possibility, unless OPEC Plus decides to actually freeze its increases after July, or even decides to cut production. But I think based on what Amena you've been saying, this is not a very high possibility so far in the market. So this was our presentation, and Reed, we're happy to open to the Q&A session if there's
Yeah.
any questions.
Yeah, no, awesome. Thanks so much for that kind of deep dive into, OPEC plus policy and Trump in the Middle East. Let's go ahead and jump into some questions. And again, please send your questions in. There's a Q&A button at the bottom. I think obviously let's start with Amena. There's a lot of stuff going on right now when it comes to Trump in the Middle East. You've got foreign direct investment decisions, you've got Iran, you've got the lifting of Syrian sanctions. If you're someone just looking at this from a 1,000-foot view, kind of what's the most important thing to focus on, kind of as we head forward here?
I think one of the biggest objectives that Trump has, as you know, and he keeps mentioning it, is that he wants to win that Nobel Peace Prize. So reaching those peace agreements with various countries around the world, that's really high on his target. He also mentioned, Reed, during his nearly hour-long speech in Saudi Arabia, that he wants Saudi Arabia to sign the Abraham Accords, but he understands that they will do it in their own time. So this is something high on his priority list. He also mentioned it to the Syrian president. So on a political side, I would say really that this is a top priority to make sure that he gets as many peace agreements. And at the same time, he's very transactional, as we all know. He wants as many deals as possible. He's getting them. He's receiving a lot of love, really, from the region here. Everybody's happy that he's back in office. So I think it's kind of flipping the page, restoring that really strong bond between the Gulf and the U.S.
Got it. And I think that obviously extends into just what are your expectations? You added some comments on this before, but kind of what are your expectations for broader OPEC plus policy, not only in June, but through the end of this year? Where do you think they're heading here?
I hate to, upset a lot of people here, but in terms of where they decide, they really do make the decision a day ahead of the meeting. So we don't get any kind of clear indications from officials on where it's going. They don't even know how to structure their policy. But according to our forecasts, at least, we still see that the summer is still a good period for them. We expect them to continue the sped up unwinding, and then perhaps explore the option of either a slowing down in the increments or a pause. It all depends on the market conditions, and it depends on also their feeling around, because currently prices are really divorced from fundamentals. If you look at the fundamentals, they're not too bad. You have, stocks are still under that 5-year inventory level that they always measure things across. On the demand side, just looking at the Secretariat's number, they seem very bullish. Of course, they talk their book. But if you're just consensus is that demand is going to be around that million barrel per day number. Our numbers are, slightly under that, maybe 700 KBD for all of the year. But they feel that there is still scope for them to get rid of this 2.2 million barrel per day voluntary cut. And just looking at the summer period, I do expect them to continue that fast unwinding. And if we look at the reasons why they're doing it, they're going to continue saying that we want other countries to comply to their quotas. Kazakhstan isn't complying to their quota, as Hamayoun highlighted, and we're not seeing agreements with any of the foreign companies there. So that's going to continue being one of the reasons why they say that we want 100% compliance to these compensation cuts.
Got it. Makes sense. Hamayoun, let's shift to you now, and just talk about the broader expectation for Iran. Obviously you touched upon it in the presentation. Trump this week really pushing the possibility that a deal gets done in a very unique way that Trump tends to talk about these issues. Do you think that a deal gets done? Do you have a probabilistic forecast for the chances that it gets done? And also, theoretically, if if Iran were to, renormalize relations, do you think that OPEC would want to impose, you know, production quotas on Iran again, like we used to see?
Yeah, so on the first part, we have increased the likelihood of a deal in our books by to 50%. It was much under before, but 50% you could tell me, it doesn't mean much. I think it's really still, despite the fact that there's a lot of optimism out there, still kind of 50-50. We're getting into the technicalities of what really matters when it comes to the nuclear deal, so the uranium enrichment levels as well. Also, I think from the US side, there's, sometimes Trump comes out and say, I just don't want them to have the nuclear weapon. Other times, like he was in Saudi Arabia, in his speech, he said, I don't want them to have the nuclear weapon, but also they need to stop their malign activities or whatever the US labels those activities in the region. So I think from the US side, there's also a lack of clarity so far, and maybe not just a lack of clarity, but even internally in the administration, maybe they don't know exactly what they're after here. But I think looking at the Trump character, he really, as I guess you would agree with me, Reed, really is after that deal. Not just this one. You had the India and Pakistan one ceasefire. Maybe there's another one between Russia and Ukraine also to come. So if he manages to get all those kind of ceasefires or kind of peace deals being signed, he would be probably at the front line to get the Nobel Prize. And I think looking at the character is something that would be very important to him. So yeah, likelihood of a deal I think has increased, but it's still very early to call the shots. But obviously, the more they meet, the more this is positive. And yes, we could be in a situation where we get a deal being signed, and that would mean Iran's exports and production do not drop. And then I get to the second question, which was OPEC plus policy in terms of quota for Iran. I think I don't think OPEC Plus would be insisting on putting a quota on Iran, because Iran was on the sanctions for so long and so was out of the quota system. I think they would stay that way, and I see it mainly as the Libya way. Libya, since the end of the war there in 2011, have been saying we'll enter back the quota system once we get back to our previous production capacity of 1.67 million barrels per day, which they never have since. So I think Iran will be the same. Their production capacity for crude has decreased from 3.8 in 2018 to about 3.4 now. And so in the short term, or at least in the first 4, 5, 6 years, they'll be saying, as we haven't reached back our capacity, we won't get into any quotas.
Got it. Makes sense. A lot of questions coming in here, guys. We'll take a couple more. Let's just kind of focus in on maybe supply and demand balances more globally. Hamayoun, maybe come back to you for this one. Obviously, we are considering short-term oversupply conditions this year. Do you think that translates into the medium and longer run? Do you think you see an adjustment on the supply side? What are your views around balances, maybe a bit beyond the very immediate short run here?
Yeah, I think if you look at the medium term, it's hard to see a lot of supply be impacted by the recent price crash. I mean, the only place where you could see supply reacting quite fast is actually the US. because it's so much, short-term driven, and the productivity of the wells declines so fast that this is where you should see some of the impact. But history tells us that those producers have been very, resilient again, and probably they will continue to be so. However, if you look at the medium longer term, it's probably going to impact supply from the likes of, Canada and Brazil, but down the line, like we're not talking before, 2027, 2028 maybe. The other projects that have been sanctioned and are producing right now, or will be producing in a few months, are still in the money, at these levels. You need prices to drop under, the OPEX levels, the operational cost level, which for Canada and Brazil, they're mainly around, $25, $30 per barrel. So you need prices to crash a lot more to see that reaction. And so that means that oversupply is going to stay there, we think, in the short term, medium term. Longer term, probably not. But in the short and medium term, when I say medium term, I'm talking about maybe end of 2026. We think balances are going to remain quite long.
Got it. Amena, we'll shift to you for the last question, and kind of we tend to get this question a lot in these OPEC Plus calls, but do you think that OPEC Plus has a lower price, floor in which they would maybe be maybe be willing to step in and stop production increases? And also, beyond that, do you think that there is any desire to kind of please the Trump administration around a lower oil price? What are your thoughts on those questions?
Just generally speaking, I mean, the byproduct of lower oil prices is that you get to pressure some of these countries that the US is negotiating with. I'm not saying that this is the objective here. I'm just saying that it's the byproduct. If you have a lower oil price, that puts pressure on the Iranian government, but it also puts pressure on Russia. So perhaps, I mean, lower oil prices could yield peace deals. I don't know, but I am just speculating here, and I don't think that's the main objective. But on that red line, yeah, we always get these questions. At what level will OPEC defend the oil price? I mean, I remember earlier in the year, I think it was around December, it was an FT article saying that Saudi Arabia is going to defend or wants $100 oil and will defend it at that level. That didn't really work out that way. I think we just need to forget about these red lines. This policy has shifted. It's no longer about defending a certain price level. It's more complex than that. And in a situation where you have prices kind of being divorced from fundamentals and reacting more on sentiment, that's where it gets tricky. And this is a time where, I mean, some of the group members are regaining that lost market share that they had in Asia. This is a good time for them to do that. And at the same time, I mean, a byproduct of this policy is containing the growth that is happening from outside the OPEC Plus group, including production from the US as well. If that manages to at least stay the same or decrease a little bit, that's one less concern for the group. So I don't know what that level is. I wouldn't put a number on it because they will continue to surprise us. So even if prices fall to 40, I don't know. I don't think that's, again, a reason for them to start reversing their action.
Got it. Thanks for that, Amena. With that, we will call this webinar. Again, for those of you who are unaware, all of this analysis and research is coming from our Insights offering, which is our research offering here at Kepler. If you don't have access, email sales@kepler.com will get you set up with an access to check that out. With that being said, thanks again for joining, and we'll see you next time. Bye-bye.